Welcome back to the Business Tech FinTech Conference, where we speak into all the movers, shakers, coders, founders, bankers, disruptors. We've got them all for you. And I think much of the recent attention in the crypto space has been on the unstable coins and the crypto winter. But some of the leaders in the field have just steadily kept on building and believing in the future of this blockchain-based technology. South African-based cryptocurrency exchange VALR completed a $50 million Series B funding round earlier this year, the biggest for a crypto business on the continent, and it's seen its valuation 10x since it raised its first $3.4 million Series A round of funding only in July of 2020. It feels like so long ago. I've got CEO Farzam Ehsani as our next speaker. Farzam, always good to chat to you. Welcome to the conference.
Thank you so much. Lovely to be here.
Now, you've really established VALR as one of South Africa's most successful players in this very key fintech industry, cryptocurrency. What role has continual innovation, iteration played in VALR's journey to the top?
Yeah, I think since we started VALR, which is now, 4 years ago, the entire space is being a complete innovative change from what we're used to from traditional finance. So I think at every turn, we have had to kind of reevaluate and rethink what traditional finance is and to see what makes sense for a new way of doing things, a cheaper way of doing things, a thing that serves people better. So in traditional finance, when you look at an exchange, you have what's called a central securities depository, you have brokers, you have what are called CSDPs. There's so many different participants. And in the crypto space, we've been able to collapse that all into one entity. Now, there are some criticisms of that, but I think those criticisms are based on the fact that it hasn't been like that. But the fact is that we hold 100% of the custody of our funds, of our clients, and that we know that they have to be pre-funded to trade, which makes it much more secure. So there's no credit risk people are taking over here. There's pre-funding, then they're trading. And so that concept is completely innovative and has changed the way traditional finance, in fact, traditional finance still doesn't do that way. So I think we've had to think from the ground up. We have something called VALR Pay as well, where the payment experience in South Africa is lacking. So with VALR Pay on VALR, you can pay rands to any cell phone number or email address seamlessly. That's the way it should be. We shouldn't have to be asking each other for branch codes and account numbers that nobody has memorized. So we're just trying to make things simpler, and I think innovation should be in service of betterment, of advancement, of service to our customers. And that's what we're always trying to do, and that's what we'll continue to try to do.
I think that's one thing that stood out for me in the space is the ability to solve for these challenges from first principles that traditional banks, traditional exchanges are really grappling with still, using legacy thinking, legacy systems. And I think if you look at a good example of VALR's innovation recently was when you launched the ability for your clients to buy cryptocurrency with credit and debit cards. That was just a couple of months ago. I think it was in April. What motivated you to add that kind of functionality?
Yeah, credit cards is still a major form of payment throughout the world. It's still expensive. The costs that we charge are just passing on the costs that we receive from the payment networks. But it's still convenient. And so we've thought, we were the first to do it in South Africa to get that ability to pay with credit card. Our real intention here is to make the bridge between traditional finance and the world of cryptocurrency as seamless as possible. And so one of the things that our customers were asking for is, even though they can do an instant or an EFT with real-time payment, they were saying, is it possible just to get funds onto the platform as quickly as possible so we can trade with when dips come, where timing is very important. So, and that's what functionality we've brought onto the system. One of the things, just to go back to your previous question, you're talking about legacy systems. Sometimes, I won't mention names, but this is one of the newer banks in town. I made a payment from, myself, I have an account there, to somebody else on their same platform. And I think it was after 8 p.m. and, it didn't go through, and it said, it's, after the cutoff time. And that concept is so silly because it's the same ledger at the same institution. There is no movement of funds. It's literally a debit and credit. And so you'll never see something like that at VALR. And I look forward to the day that things like cutoff times in a purely digital world don't exist, because it doesn't make any sense.
It's really anathema to the world that we're living in, isn't it? It's so strange.
Yeah.
Now, you mentioned that you've launched what's it, VALR Pay, and I think that's quite interesting. That's instant payment service, zero fees. I mean, that's really just ticking all the boxes there. How successful has the product been since launch?
We've been very happy with the service that it offers our customers. And to provide a little more clarity, it actually uses Bitcoin on the back end. So it's actually using the Bitcoin rails to do RAND transfers. So it's actually a Bitcoin transaction. It's obfuscated from the customer, so the customer doesn't see the use of Bitcoin, but it happens using Bitcoin, which is how we can do it. And as you said, it's free, completely free for the sender, completely free from for the recipient. So it's been great for people making transfers to each other. As I said, you can send it to any email address. Or if you got rands in your VALR account, you can send it to any email address or cell phone number. That individual, even if they're not on VALR, will receive either an SMS or an email to say, please sign up to claim your funds. But ultimately, our phase 2 is going to be trying to get merchants onto this as well, which will make it much more useful. Because right now it's more for peer-to-peer payments, and we're looking forward to merchant acceptance, which we also think is going to be a changer, because they're a game changer, because merchants, as you probably know, pay 2 to 3 and sometimes more % to accept the funds. So that's quite a lot when you're on a low margin business. So we'd love to also help merchants with VALR Pay as well. So that's the next phase.
That's very exciting. Is it available for remittance at all, cross-border? And I just ask that because I was reading a World Bank report the other day in preparation for another conversation around cross-border transactions, and it really, I mean, it cost a Tanzanian 25% of what they earn just to remit funds back home. Remittance is just, I couldn't imagine spending a quarter of my salary, my earnings, on just moving money around. Are you thinking about this in the remittance space at all?
We're definitely thinking about remittance space. I think what's important to note is, the product is being created so it's fully compliant with the local regulations and laws. So all the rands actually stay in a bank account in South Africa. But we do have customers that come onto the platform that can actually access those rands. So even if you're in Zimbabwe, well, Zimbabwe unfortunately is a sanctioned country right now, but if you're in other countries and you have VALR Pay, you're able to transact with VALR Pay, but you are a customer. So rather than the funds coming to you offshore, effectively customers are coming to South Africa, and the funds remain within the system for exchange control purposes and things of that nature. It is definitely possible. And last thing on this is, I agree, which is one of the reasons that we actually started VALR, is that it's absurd. It's almost criminal that people are paying, upwards of 20% of their money as a tax, effectively, to intermediaries to transact something that shouldn't cost anywhere close to that. So there's a lot of injustice in our financial system. We're one of the things that drives us is try to reduce that injustice, promote justice within our financial system to serve people.
That's a great sense of mission there. Now, the cryptocurrency industry is clearly, I think, at the forefront when we talk about innovation in the fintech space. It's always right up there. In what ways do you think that other fintech industries, insurtech, for example, can draw inspiration from organizations that operate in this ecosystem in the cryptocurrency space?
It's an interesting time to be talking about this. Obviously, we've had a crash in crypto prices. The whole market cap of crypto, the value of all cryptocurrencies, has plummeted from about 3 trillion down to less than 1 trillion right now. But people forget that a couple of years ago, this was the height of what the value of all cryptocurrencies were. Yeah. And so I still have a very firm belief that crypto in some form is going to be the basis for the money of humanity's future financial system. And so whether you're in insurtech or not, I think, in all these different fintechs, I think we're seeing many more of them explore cryptocurrency, understand it, integrate it into their apps, etc. And I think we're going to start seeing, crypto not just as an industry, but actually as a foundation of a financial system going forward. Many people will argue with me to say it's too volatile and how can it be used? And absolutely it is volatile, but this is the start, right? This is its nascency. This is its, very beginnings. And so with that, humanity is trying to figure out what this stuff is worth. But even with the tremendous amount of volatility we've seen, it's been less than previous cycles. And I anticipate a comeback even stronger than before. And as we see more troubles in our traditional financial system, I will see more. I anticipate much more adoption in crypto. And so my message is, if you're still doubting this space, I mean, I think it's time to wake up a little bit and kind of take a look at what's going on in traditional financial system and looking at what this technology can enable for the world, and to open your mind a bit.
Now, I have had it put to me by a few others who say it will never become widely adopted cryptocurrency because it has the ability still to be a platform for the movement of illicit financial flows, terrorism, call it what you will. And so there needs to be some kind of improvement in the transparency in the back end. And until that happens, they can't see it becoming mainstream. I mean, how are you thinking about this?
Illicit activity and illicit flows, we're talking about trillions of dollars through our traditional financial system. That doesn't stop our traditional financial system at all. The number one currency that's used for illicit flows is the US dollar. Not any stable coin, the US dollar itself. So to start saying that we're not going to see adoption because of illicit activity, I think, without knowing this individual, is a bit short-sighted, to be honest, and to speak quite plainly and directly. And I think that what we've seen is that the internet, for example, many people said, oh, it's being used by terrorists, etc. That is such a flawed form of logic as to what will get adopted or not. In fact, oftentimes, what illicit people, and I'm not promoting illicit activity at all, but oftentimes people using a technology for illicit purposes is a precursor for mass adoption. That happened with the internet. We're seeing it happening with cryptocurrency. This illicit idea, there are now reports that say much, much less, I think, than 0.1% of the flows of crypto are illicit. So this is an argument from many years ago. It's always disappointing to hear it brought up in a context that doesn't really make any sense anymore.
Yeah, and it's former bankers generally that have a look at their own industries being disrupted that often point to that. Sadly,
vested interest.
Vested interest.
You'll reach for any argument with when you have a vested interest.
Yeah. When you look at how the debate is evolving around the unpredictability, and you did touch on it, I think it's still in fintech businesses. This debate is being had about how crypto should be integrated into their business models, or whether it should be because of the volatility. How do you see the debate evolving here in South Africa?
Yeah, we've got a lot to do with the regulators as well. I mean, we still need a regulatory framework. For sure, there's a lot of volatility, and I'm not saying that that's not the case. And I do think it's going to continue to be volatile. But that volatility is because of what the asset claims to be, which is a completely independent asset that has no relation whatsoever to anything that we've known before. It's not linked to anything. And a lot of people see this as a negative. It's actually a positive. If it were stable, then that means it would be linked to something. That means humanity would know what it's worth, which means it's not that innovative. So we expect this volatility, but we do expect this volatility to reduce over time. So the reason I bring that up is that I think people getting into crypto, whether it's institutions offering it to their customers or individuals themselves, should be very, very careful and cognizant that it is early days. So the fact that I believe that there'll be a lot of adoption down the line doesn't mean that it's a sound investment and you should plow all your money into it right now. I'm not saying that whatsoever. In fact, I often say, don't put in more than you're willing to lose at this stage until you learn more, and then your risk appetite kind of increases concomitantly with your knowledge. But I think the idea here is that it's a very powerful technology. And just like, in the early days of the internet, I always say, one of my friends who was doing emails back in the early 1990s said it took him 26 minutes to send an email. And I'm not talking about writing it, I'm talking about pressing click, that we do right now.
I'm waiting for the dial-up modem.
Yeah, you would have been forgiven to say, no, this is useless. I'll just go to the post office and be back within the 26 minutes. But my point of saying that is things are changing, right? The internet changes, cryptocurrency is changing, volatility is changing, adoption is changing. And so one needs to be careful. One needs to provide the disclaimers to one's customers if one's providing it. One also needs, as an individual or institution, to be wise with the allocation that one gives to this asset class. But to say no allocation, I think for institutions, which is what we've seen in South Africa, I also think is doing a disservice to the population.
I was really disappointed, to be honest with you, when we saw the amended Regulation 28 released by Treasury recently, and it remains kind of on that side of not allowing investments into cryptocurrencies. Now, even if you just say, a 1% allocation, I think, and to your point, to not have any allocation to what is by many believed to be the future foundation of commerce, of our, the way we exchange value. I mean, it just, to me, beggars belief. But I think that's a conversation we need to have with the regulator another day. What are your predictions for how the cryptocurrency industry is going to continue to evolve in the coming months and years from what we've seen so far?
Yeah. So in the last few weeks and months, we've seen obviously a big collapse in the prices as discussed. And with that, several players that are in the crypto space that have been lending out funds have been caught off guard, and leverage in the system has come crashing down. And I think we're seeing a washout of some of the firms and some of the institutions and some of the players that, quite frankly, were just over leveraged and didn't anticipate the full volatility of the crypto prices. So I think it's probably still some more damage to come, I imagine, that we're going to hear in the news. But I think those firms and those kind of players will be washed out, as should be the case, by the way. If you take on too much risk and it works against you, my firm belief is that's what should happen. You should be taken out. I think in the traditional financial system, we have bailouts left, right, and center, and all we've been doing is just kind of prolonging the inevitable. So I think we'll see that clean out. I think it will. This lull, we don't know how long it will last. It could be weeks, months, maybe a year or so, maybe a couple. But I think we'll inevitably start to see it trend back up, and I think it'll probably happen sooner than we think. But players like VALR and others in the industry are looking at this time as a time to keep building, right? We think that there's already a huge, massive influx of people that we've seen over the last few years. The price that we've come down to, this crash, was the previous high of the previous cycle. Not to say it won't go down any further, but we think that as we build, as more infrastructure is built, as we kind of make it easier to get into the crypto system, we're looking forward to the tide turning, and that it will.
Yeah, well, we see more people with cryptocurrency trading accounts in South Africa than with broker dealing accounts. So it just shows you what the appetite is like in terms of.
I didn't know that statistic. Interesting. Yeah, I didn't know that.
Yeah. Well, Farzam, on that point, I'd like to offer attendees an option here to get in touch with you to learn more about VALR's products and services. How do they do that?
Best on Twitter, Farzam Ehsani, Farzam Ehsani is my handle. My DMs are open, so please feel free to get in touch.
Fantastic. Always a great pleasure chatting to you, the CEO of VALR, Farzam Ehsani, here at the FinTech Conference on Business Tech, the country's #1 business news website, where we're taking you through the whole gamut. Stay tuned after the break. I think we might actually be talking InsurTech here at the Business Tech FinTech Conference.